Hi, this is Marc with your forex update for the week commencing 10th of January 2010. My standard breakout method, the M2 method as shown in the strategies page, simply deals with breakouts, and what we look for is breakout from a trend line or an area, and then a pullback and reasons to enter. This is a Euro USD weekly chart, and we've been mentioning for the last 4 weeks that price has kept coming down, hitting this EMA and this weekly trend line and simply bouncing off again. So the problem is we haven't had any breakouts. So how do we deal with it? Well, this is the Euro USD now on the daily chart, and I mentioned during the week that we are now in what looks to be a flag pattern, and a flag pattern is determined. This breakout here is classed as the pole. This is the pendant or the banner or the flag, and then what we look for is a breakout from here down, and the breakout down should be equal to the size of the flagpole. So we're talking 700, 800, 900 pip move. So ideally we're looking for a breakdown here to 1.35 area for the Euro USD. However, whilst we're having this sideways movement, we obviously can't trade breakouts. The fact that the 200 EMA is completely horizontal is confirming the fact that we've got all this sideways movement. But what initially we were looking for were bounces off 42.50 and 44.50, but now we're starting to get some higher highs here, and price is moving up and touching this upper line and coming down and touching the lower line. This was Friday's NFP move, so it did actually spike it, but we are still within a trend. Now, I have mentioned a few times of late, if you are new to Forex, it is a good idea, in my opinion, to concentrate on just one or two pairs. And this is a classic example of how you could have made money in the last 2 weeks on the Euro USD, and you could have done this off the daily, or you could have done this off the 4 hour. A lot of these moves do appear to be 4 hour moves at the moment. And what we have here, we have the upper line where we were looking to short, and you had the opportunity here to short here, 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 and here. And when we say, for example, this one here was NFP, I don't trade NFP, but if I am looking at an area of 44.50, then I will look 10 to 20 pips below that area for a short. Price doesn't always come up and touch. Now, the black line I have here would have been a failure. So we have 1, 2, 3, 4 opportunities down that won, and each of these moves averaged 150 pips down, from the upper line to the lower line, 150. Equally, we were looking at longs from 42.50. Now we only had one, but there was a kind of a trend line within a trend line at 4,300 psychological level. Again, you could have longed here, 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 and here. So one failure out of 9 or 10 potential moves. There are trades out there, and this bounce method does work particularly well in slow markets, and we had a lot of success with this in the summer. So we are in a holding pattern as far as the daily goes. We are waiting for price to break out of this area or out of here. We wait for a breakout, then a pullback, and then a move away. Now the NFP news last month in December, this was the candle of NFP Friday, December, and this move created a move down of 600-700 pips. The news on Friday was the exact opposite of of December's news, i.e. it was bad, much worse than expected for the dollar. So we could presume perhaps that price is going to break up. So we either have the option of the pendant down, or we have the option of the move back up again. But either way, we will look for a breakout now of the trend line, not the horizontal line, the trend line, and then a pullback. The euro, as you know, moves in the opposite direction for the Swissy. Using these bounce trades on the Swissy on a weekly chart for the last 4 weeks, you would have made good money. Now, I don't trade the Swissy that often. You don't because of correlation. If the euro is going up, the Swissy is going down. I use it for confirmation. Now here you see that the Swissy was bouncing off this 34.55 EMA all last week and some of the week before, but the moves back up again were simply too small. So I use it for confirmation. What I would be interested, if price comes back to the upper weekly trend line again, look for shorts, and if price breaks through and closes below 1.0200, look for shorts again, because this is a long-term downtrend. Pound dollar, similar situation. We've had bounces off 5,900 and we've had bounces back down of 62.50. And during the week, I think it was Wednesday for Thursday, I told my followers to look for a short here at 1.0650, and I said that we would then be looking for a possible move down 150 pips away back to 59. It worked. I also said to look for longs at 159 for possible 150 pip moves back up. So you have there, with two pairs, with the euro and the pound, you have had on the pound alone there a 300 pip move, and on the euro over 1,000 pips worth of movement just off simple bounces. Now, does it work all the time? No, of course it doesn't. This is forex. Nothing will ever work all the time, and if you start to believe that it will, then it'll come back and kick you in the teeth. Here I was looking and told my followers to look for a short on the Aussie dollar yen, and the reason being this is a double top on a daily and a weekly chart, and I personally, we were initially looking at 85, which was down here, and on the day I went to 83 for entry for a short, reason being this recent high. Now it's gone through and stopped, spiked there, and then we had the NFP nonsense on Friday. Why it stopped where it has? Possibly for this reason. This is the Aussie dollar yen on a weekly chart, and I have fibbed from the recent high to the recent low, and it stopped to the pip on Friday at the 61.8 fib. So this area is crucial for the Aussie yen next week. Either we're looking for a break out, pullback above 85.60, or we are still looking for a potential reverse back down. Similarly, with the CAD, somebody asked me during the week why I look for pullbacks and don't just enter beyond the recent move. Some people, what they will do is, here, this is the CAD. Now, I did point out to look for this, and then I went and missed it myself. I was busy with lots of other trades. But we were looking for a break and below 1.0400. One method of trading breakouts is you take the recent low or high, and in this case the low, which would have been 1.0330 here, and you then wait for the next candle to come down and move beyond that, maybe 5 or 10 pips. Well, for me, in this case, had you done this with the CAD, the best move you'd have got out of this would have been 43 pips. The reason I go for pullbacks, I go for a breakout of an area followed by a pullback. This was a classic on the CAD. You only needed a small stop the other side here. You have made an extra 78 pips before this trade had even kicked in. That's why we do it. Now, on to the week ahead. Again, looking for breakouts or bounces. Euro GBP, we have had bounces off this 200 EMA. This is a daily chart, and you had a number of opportunities here to long, and we were taking bounces at 90 for shorts. More obvious on the 4 hour here, the opportunities to short. Now, it looks as though this move now is really, we need to start looking at possible shorts at 90.25. So breakout above, or pull back and bounce back down again. CAD we've showed you the other week. Gold rebounded off a 78.6 during Christmas, and has now bounced back up, and as a result has dragged the Aussie dollar with it. Now the Aussie dollar does look to be in a bearish, a bullish move up. However, where did it stop on Friday? It stopped to the pip on the 78.6 fib. Now for me, until this breaks, this is still a down move. So what you need to carefully look at tomorrow morning at market open is the Bollinger Band. If this slams shut, it would give confidence that this move is going to go back down, possibly only a pullback before a further move up. If it stays open, then I would have to look for a breakout and then a pullback. Right, hopefully a similar situation with the New Zealand dollar, again rejected 78.6 and has been bouncing between 61.8 and 78.6. On the New Zealand dollar 4 hour chart, we do have what looks to be a potential head and shoulders pattern forming. Have a look at the video in the strategy section. But this would suggest if the move breaks down from here, from the neckline, that this move could go 170 pips, i.e. the same distance from here. Alternatively, look tomorrow for bounces or breaks at 74 or 73. Dollar yen, all the yen pairs I'm leaving. The yen at the moment, this is dollar yen. The Bollinger Band closed on the daily, and the weekly is very steeply down. Look at that closely at market open. Otherwise, there's just too much in the way for me with the yens tomorrow.